about a new fund offer. Harish Krishnan is joining us now from Birla AMC. He's Co-CIO and Head Equity there. And they are launching a new fund called the Quant Fund. Harish, I know you are a very mathematically inclined and a numbers guy. Talk to us about what is the quant strategy we are adopting in this fund. What's the philosophy there?
Uh, Our underlying philosophy, Ajay, is that man plus machine is better than either man or machine. There are strengths of human fund managers and there are weaknesses. Similarly, there are strengths of machine and there are weaknesses. So, if I look at from an Indian perspective, the strength of the human fund manager is generally when you look at mutual fund portfolios at large, we tend to avoid bad companies. So names with general poor corporate governance, where every year you see maybe 5 to 10% companies fall about 70-80% and not recover. These are names that you would find lesser as far as mutual fund portfolios are concerned. On the negative side, human beings are biased, and that bias typically comes in at the time of selling because there's either a regret of selling too early or too late. When we think of machines, it is obviously the fact that they are unbiased. There are some very crisp rules of buying, selling, and holding. The negative is that machines are generally garbage in, garbage out. They really don't have the diligence to say which is a great company and which is a company which is otherwise manipulated. And therefore, there are these strengths of human minds. There are strengths of machine that we are blending it together in this fund. Our starting point is the top 75 positions of each of the fund houses in India. We think that this typically includes about 80% of the AUM that every large mutual fund manages. And therefore, it's a very, very high quality, filter because mutual funds generally put their highest conviction bets in these names to try and create alpha for their unit holders. So from this portfolio, we avoid small caps and then we blend in three factors, which are primarily the quality factor, the momentum factor, and we weigh it on the basis of lower volatility. And through this process, a very high quality universe, which is vetted by the best minds in India in terms of mutual fund managers. We run the machine in the form of these three factors to arrive at a benchmark agnostic large and mid cap variant from a fund perspective is what the Aditya Birla Sun Life Quant Fund is.
Uh, uh, Harish, the process of this particular fund, tell us how different is it from the other quant funds which are out there? And okay, if you can, even the prospective investors are listening to this, just to explain the process.
Sure. The starting point, like I said, Ajaya, is the top 75 positions in each of the fund house. So we take the 75 positions of Birla, 75 of Kotak, Axis, HDFC Sundaram, etc. The superset of all of these companies comes to around 400 odd companies at this point of time. When we look at across the length and breadth of all the mutual funds in India. Out of this, we avoid the small caps, and so we're getting at about 240, 250 odd names. We then run it past by a quality filter, wherein we avoid outliers which have gained very significantly over the course of the last 5 years, or which have had terrible experiences in the last 5 years in the form of a very elevated drawdown in the past. Okay. From here, we basically run the momentum factor, wherein we are looking at consistent returns over the course of the last 6 months to arrive at a certain set of stocks. Then we look at sell side estimates in terms of where earnings are not coming through. Those are the set of names that we want to avoid. And finally, we wait on low volatility. So, in a sense, let's say that this is the World Cup season for T20. Now, one way of creating a team for the T20 World Cup could be to look at all 5,000 Ranji Trophy players and say that these are my three statistics or algorithms that I'll run on all the 5,000 players. The approach that we have chosen is different, which is that we are buying only from the IPL teams. The IPL teams are the mutual fund equivalents in our case, which themselves are scouting across all of these Ranji Trophy players. Within that, also, we are looking at names or which are looking at players which have played at least 80% of matches, which is what we are talking about the top 75 positions. Then we are looking at the form in the latest IPL. which is what the momentum factor is all about. And then we are weighing on the long term consistency of each stock. So, this is roughly similar to what we would do in any other discipline. It's just that out here, through this process, we arrive at a clear rule based articulation of what we will buy, what we will hold, how often we'll do this rebalance, roughly about 3 months, and what we will sell. And therefore, this is really the recipe through which the portfolios are generated as far as this fund is concerned.
Not go down to each company's, like a batsman's batting track record, what kind of stuff they've done in the past. So you will not look at valuations in particular, or earnings growth, or whether a certain policy environment is being created, which would, you'll assume that the top superset is actually taking care of all of that.
That's right. So, absolutely, because every fund manager themselves are using their own judgment. They're using it from their own lens. There are very storied fund managers who are looking at from a quality bias. Some are value fund managers. Some are growth fund managers, and each of them come with their own set of views on the future, and therefore they select their best 75 positions in terms of creating for a fund house. We are basically picking from them, wherein we are looking at it from the lens that these are the best minds that I've already chosen. Within that, let us look at the form, which is the last 6 months form. Even there, we are not just like in IPL, one approach can be to just buy the purple player or the orange cap, etc. Out here, our focus is every ball that a player has played. How is that statistics coming through? Every game that they have played, what is the statistics that are coming through? So we are basically wanting consistent performance over people, or over stocks, which may have had maybe 5 or 6 sessions out of, say, the last 6 months where they have done very well, but the rest of them have been very lackluster. So we want consistent performance in the IPL as a corollary, as performance over the last 6 months to arrive at within this high quality set, which is coming from all other mutual funds. Let us look at what is currently in vogue, what is currently in trend, and then we weigh it on the basis of future expectations, which is where we get in the sell side estimates. We see which are the names which are not seeing any kind of earnings upgrade. Sometimes stocks can just go up. There are even cases, for example, a defunct airline where the stock prices may go up. We want to avoid those cases where there is just momentum which has come through in a particular session, but we are looking at more from a perspective that, are there underlying earnings, fundamental underpinnings also in that name, and then we are coming at creating a portfolio.
Before we let you go, Harish, since we have you, a quick word on, budget is one particular trigger which everybody is watching out for. 100-day agenda, others for the as a market trigger. Consultation meetings have happened. My view from you is, I would like to know from you is that if the government sticks to fiscal prudence, but does some amount of balancing act between the needs of tier 2, tier 3 rural India, because they are actually sitting on a strong buffer now. How would the street read it? And do you think they would continue with the path of capex-led and investment-led growth this budget as well?
So I think they will continue on their broader agenda of fiscal prudence and the focus on supply side. But given the verdict, and also the fact that there are some key state elections which are likely to happen over the course of the next 6 months or so, we do think that it is also a time to also focus on demand side creation. As it is, there is reasonable buffer in the form of, say, the large dividend that came from the RBI, the healthy GST collections, which are still going above trend as to what the government had anticipated. Right. And then, of course, if the government really requires, it can divest many of their holdings in various companies, which have done exceedingly well in stock market. So therefore, there is enough room without really upsetting the fiscal calculus for government to do both. And in some sense, I think it is a welcome development that they are focusing both on demand side creation without necessarily sacrificing their supply side agenda, that they've been very clear in terms of over the course of the last 5, 7 years that they want to continue to persist with. So I think that would be like in some sense, a dream budget outcome that various market participants will look at.
We'll let you go on that one. Thanks so much for your time and good luck on your new quant fund as well. Talking of budget consultation.
If you like this video, then like, share and subscribe to ET Now.